The Nigerian equities market witnessed a mild rally despite profit-taking activities ahead of the MPC announcement tomorrow. The consumer space is getting investors' attention. Janet Ogabi, Senior Research Analyst at Tellimer, joins me to review today's activities. Janet, thank you so much for taking the time out to join us today.
Of course. Thank you for having me.
So it's first trading day for the week. It's also the first day of the MPC meeting for the Monetary Policy Committee. How are investors, what are they thinking in terms of what the outcome could potentially be, and how is that affecting share purchase or market trading?
Thanks again. It's good to speak with you. Currently, like you said, it's the first day of the MPC meeting, and it's a consensus right now is that there will be a rate hike of about 100 basis points to 16.5%. Usually, we don't see markets react to the MPC news. That is not immediately, but definitely it's factors that investors take into consideration. We're in a market where earlier this year we were north of 20%, about 26% up in the market, but now we're down 4% or thereabout, 4.6% year to date. And we've seen these losses or these declines in returns majorly due to expectation again as regards interest rates, as regards we're seeing increase in interest rates. We're still yet to see interest in foreign investors in the market. So it definitely puts pressure as far as, or at least reduces the attraction for investors as far as equity is concerned. And we also, cannot also ignore the global, the contagion for global markets. Everybody, all major countries are also increasing their interest rates to adjust to realities as far as inflation is concerned. But as far as Nigeria, okay.
All right. Now, for those stocks, that have sort of been safe haven stocks for investors so far this year, how safe a bet have those stocks been?
When you look at how, the major drivers for this year have been stocks like Airtel and Seplat, who have dual listings on the exchange and have had particular interest by investors. You also have the likes of MTN. Take Seplat, for instance, that used to, it was at about 1,200. It's down to less than 1,100 naira per share at the moment. I think about 1,040 naira per share. Right, so it's each of these stocks have their peculiarities, and you'd understand the peculiarity with Seplat as far as mobile news is concerned, and also as far as it's usually that's usually a safe haven for because of the dollar component of the stock. So it's usually something that attracts investors. But we've seen that decline as well, and we've also seen quite a number of stocks in decline. Banking stocks and consumer goods as well have recorded some declines as well. But what that also means is that just look for the bright spot to be that the multiples will be cheaper for investors to come in at, but it also comes in at certain risk.
Let's talk about some market news that that had our eyes this morning. Dangote Cement planning a share buyback. That's 10% of its issued share capital at a transaction valued at over about 406 billion. Now we know that companies buy back their shares for a number of reasons: to consolidate ownership, prop up the share price, or boost financial ratios. For DANGSEM, which is it?
For DANGSEM, this would be, I believe, the third tranche. It's happened twice before, and it's basically it's beginning to look like a trend of how the company is looking to give back to investors. When you understand the share buyback, you know that what that potentially means is you're reducing outstanding shares and increasing the value of the stock. So it's good. It's usually good news for investors, basically. But what happens is the volume of shares is also quite a significant factor to take into consideration. And previously, we've not had the volumes push up, reflect significant value for, at least nothing too significant for investors. So it'll be interesting to see how this particular buyback turns out. But we look forward to how. For it to move the needle as far as investors are concerned, you would have to have significant volume take up by the company.
Okay, let's talk about the consumer goods sector. Year-to-date performance so far, the major pain points, and just how the investors have maneuvered, and not just investors who are buying those stocks, the companies themselves, the facts behind all the numbers, how they've been able to weather the environment.
I mean, like we've just, talked about very briefly, inflation is it's definitely one major pain point. FX is also another significant pain point for companies, consumer goods inclusive, and it's something that has definitely affected margins. So maybe take the likes of derivative from consumer goods or looking at cement, for instance. We've had where, companies have had to increase their cement prices to adjust to reality as far as, inflation or cost of goods are concerned. And basically trying to protect margins as much as possible, but not without also recording some losses because there's an extent to there's an extent to how much they can increase prices to reflect realities as far as the challenges that companies face in the market.
So, but in terms of names, key names, what names are on your radar from the consumer goods sector that maybe a good re-entry, but do they also have a good re-entry point for investors who are thinking of going into those counters?
I mean, I could speak to the cement stocks that are listed, basically. But for cement stocks, you would definitely have some good buying price for Lafarge, for instance. Lafarge has always had, I mean, so far this year, they've continued to enjoy benefits or they've had some good benefits from, the listing of their South Africa business, and we've seen that impact their finance cost as well. So they've had some good run on that front. But when it comes to, losing some aspect of their market share, we saw that, they lost just quite a bit market share earlier this year. But as far as the company is concerned, when you look at the multiples, you see that the multiples are still looking attractive for investors, at least relative to peers listed on the exchange.
Speaking about peers, how have Nigerian stocks finally fared against their emerging market peers? I know that obviously other stock markets too have also had their own fair share of drama, but how have we fared compared to them?
I mean, as far as Nigeria is concerned, like I mentioned, we used to be top performer in the market. Even globally, we were north of 26% where we peaked at. We were north of 26% where we peaked at earlier in the year. But we're no longer top 10, as far as global markets is concerned. So definitely we're seeing the decline in prices or the decline in our performance affects ranking in that regard. Right now, I believe Turkey is the top performer on the global block, right? So it's like I said, inflation, concerns on interest rate. These are global phenomena that are affecting performance globally, and we've seen that also affect the markets. But we used to be in a better position because we had less contagion, from global happenings, because we didn't have that much listing or that much interest or that much performance or share of performance from foreign investors. So we had less contagion on that regard.
Right. All right,
we
Janet,
had released the reports in that regard. Yeah.
Well, we'll leave it there. But thank you so much for all that insight. We appreciate your time on the show today. Janet Ogabi, Senior Research Analyst at Tellimer.